Hello, welcome back. Another top five. I hope these quick top fives will help you to find some things, maybe not all, but some things that will help you to improve your trading. So in this top five, it's the top five trading psychology fails that will sabotage your trading. Make sure you watch the whole video. I got a little bonus in it somewhere. Trading psychology, of course, there are books written. A lot of books are written on the subject. You can have a great plan, you can have a great strategy, you can have a great idea. You know, when you go over the charts in the weekend, um, and you get started the new week full of confidence. You have these great opportunities, but then for some reason you sabotage your own plan or your trading. It will it when the new weekend arrives, you're like, man, that was a tough week. Let's get behind the charts again. You feel good. You start a new week, and then again the week just is different than you thought it was. So let's see what kind of fails I often encounter when I talk to people or help people or whatever over the years on my social media platforms. I've seen a lot of them, and these are the five. Uh, to me, the five trading psychology fails that I have encountered the most. Number one, of course, fear. Fear, 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 people. People start trading in a demo account, they look on YouTube, they look on Instagram, and they see all those people who are making thousands, maybe millions of dollars, not knowing that probably 99.9 of all those things you see on there are fake. So they start trading, they skip their demo account, they put in some money, and they open a trade. They don't know really what risk management is. They don't really know what technical analysis is all about and how to manage the risk and to read the chart. So what happens is people jump in with their own money, and then first of all they encounter that trading with real money, trading with your own money, is totally different than trading with a demo account. In the demo account they just hit buy with a huge position, and before they know it they're up 1,000, and they're like, man, I can be rich within a couple of months. This is great. Let's go do it for real. So what happens in the end is that of course you take on one trade, and you let's say you have $1,000 as a starting as a little small account. You open the trade, things turn out not the way you want it to be. Risk management is off, so you lose 200, and you're like, whoa, this was a pretty quick trade. I'm down like 20% of my account. Okay, what should I do? And maybe you take another trade, take a loss again, take another trade, take a loss again, and by the time you reach like 50% of your account, you're like, okay, what can I do? And then the fear comes in. Your fear starts to develop on losing more money. That's the first thing. But also fear will generate something else, and that's the following. Once you take on a position and you're actually in the direction of the trend, and things can work out great for you, that fear will make you get out of a position way too early. So a setup with a, let's say, 2% risk, and if you leave it and you don't do anything, and it starts running in the direction you thought it would be, um, you make back not 2%, but maybe you make like 8% on that trade. So that's the whole equation in trading. You have to try to figure out how to have more winners than losers. You will have losers. That's a part of trading. Um, but fear will get you out of that position. You're like, oh man, I just lost 50 yesterday, and now I'm up like 30, so I'm almost break even. So by the time you reach 50 again or whatever happens, you hit that close button, and then the day after you're watching, and that 50 could have been 100. So the loss of the day before could have been erased. Also, a new profit of plus 50 could have occurred, but because of fear, will get you out of positions too soon. Um, your risk reward ratio will become not in your favor at all, and at the long term you will eventually lose money. So fear, I can talk about fear for hours, for days if I have to. Fear is a huge human emotion that will sabotage your trading. Second one is the opposite. It's greed. Maybe in the same scenario, you took on your first live account, you got some trades in, maybe not all good trades, and then all of a sudden, bang, you get in on a position, you're right on time. A lot of time you don't watch the charts, maybe you're asleep, and then you wake up, you watch the charts, something you've been looking at for days, and then bang, it breaks out, it starts moving, you add a position, well calculated, 2% risk, and it starts running, and you're looking at it and you're like, oh man, this is gonna be a huge trade. Let's add a little bit. Let's double up on size. Well, by the time it starts running and you start doubling up on size, your whole risk reward is out of the window, because the first trade was a setup trade with a stop loss in place that was near a support, for example. So when it starts running up again, that is indeed your stop loss. But when you start adding, the distance between that stop loss and the position where you're adding becomes too big. So the risk reward becomes, you sabotage your risk reward. So, but especially when you have taken some losses, greed will really sabotage your trading plan as well, because the money, the potential of a certain trade, it looks great. You start adding, you close your trading account, go out for shopping or sports, or maybe you go to your job, whatever you're gonna do. Later on the day, you look at it and it was like the only thing is left is a pin bar. It started moving up and then it fell back down, but right at the time you weren't looking anymore, and that's it. So that's really not something you want to do, and will sabotage your trading as well. Fear and greed will both do that. A bias. Well, let me explain this one. If you have been looking at a chart for maybe weeks or months, and you're like, this is a downtrend, it's been so long, this thing has to come up sooner or later, I have this trend line in place, I have this resistance in place, as soon as the trend line breaks and I get a retest and I get a confirmation and it starts moving again, I'm gonna jump into this trade, and something like that. So by the time something happens in the chart, for example the trend line breaks, you start getting all excited, and it's like, okay, now it's happening, this one is going to the moon and beyond. So you jump in, maybe greed, maybe fear, whatever other psychology things will also play a role in that. But your bias was, I am waiting for this thing to reverse. So by the time you see something, to you it's like 100% confirmation, like, I gotta get in. To another trader, if you look at TradingView, for example, you see it all the time. 50% of people say go long euro dollar, and the other 50% says go short. Well, they're all right, as long as their risk management and all is in place. They're all right. They have a plan, they have a system, and they are willing to make a couple of pips. So at the end of the day, they all have a plan. If your bias is to wait for a reversal in the market, you start to see things that will confirm your idea. If somebody else is looking at the same chart and it's like, ah man, this is a great pullback, I can go short again from here, I think the person is right as well. Somebody else will say, yeah, but this is not yet an inverse head and shoulders. We need the other shoulder, and then we need a break of the trend line. We need way more before we can jump this trade. So a lot of different people, a lot of different ideas. So make sure that if you have a bias, try to always go back to your rules. Did the trend line break? Yes. Has it already retested? Is there a support in place already? Is there still a resistance that is potentially blocking this move from going any further? Is it just the beginning of a sideways moving market? There's a lot of scenarios that can happen. So your bias, because you want to see something on the chart, can also sabotage your trading. Then the fourth, focusing only on the outcome instead of the process. A lot of people, this is one of the reasons why a lot of people fail. 90% or 97% of all retail traders, they start, they invest money, they lose money, and they go out. That's the whole reason why there are brokers for retail traders. They don't make money because retail traders trade so good. They only make money because retail traders put money in their accounts. That's the only thing. So when you focus on the outcome, let's say you have that €1,000 or $1,000, you take on a trade. You don't. For some reason, people think that trading is something that you can learn in a couple of weeks, and when you want to go to, the, in normal life, you spend 4 years learning something before you can take on a job. So um, it's the same in trading. It takes time, it takes effort, it takes education, it takes a lot to become a successful trader. So focusing on the outcome, for example, that first thousand that gets wiped out within a month because you don't know what the hell you were doing. That's the whole problem in the trading business. And then you're broke, you blew up your account, and you don't want to share it with your friends. You're ashamed, and you're saying to yourself, man, I could have been so stupid, and next time I'll do this or I do that. Maybe you put in some money for a second time, and probably just put in 200 or $300 because you feel bad about the first thousand. Well, that those amounts are amounts you cannot even start trading with at all. But again, you blow up your account, and the outcome is I did it wrong. I've lost money. This is it. Let's you know let's quit this thing. Let's go back to my job, and this is enough for me. Instead, you should be focusing on the process. This is my trading plan. Did I stick to my trading plan? Probably you didn't because your lot size was too big, or probably you entered too early, or whatever reason. There are reasons why the process didn't work. Um, if you can identify those things, you will adjust those things, and your trading plan, your trading strategy, will get better and better and better over time. So do not focus on the outcome. And I know that's hard because, of course, the reward in trading is a growing account. So if you blow up an account that is very very, you don't want to go back behind your trading platforms to start all over again. I know that feeling, believe me. But so don't focus on the outcome. Focus on the process in trading. That's way more important. Did you do what you have to do, or didn't you do that? Did you sabotage your own plan by all the common trading psychology mistakes we make? Um, that's possible. So if that's the case, don't focus on the outcome. Again, focus on the process. Improve your trading. And last but not least, this is kind of a bonus. Money is made by waiting, not trading. Now, this is not one-on-one, some something psychological. But here's the thing: people, traders, we want to get in the market in the morning, open a trade, and then make a 5% profit by the end of the day, and go to sleep, feel good. Next day we wake up, we do the same, and we're up 5% again. That's not how trading works, unfortunately. So we often are looking and scanning and doing all things and zooming into lower time frames because we want to trade. We want to look for that next opportunity, especially when we took a loss. Something like revenge trading um, is something that comes out of the previous things we talked about. You lost money, you feel bad about it. You lost $50, you want to get that 50 back, and you want to make another 50 to be up in your account. So here's the thing: money is not made by constantly looking at the charts. All those intraday noises. You don't have to look at that. It just clouds your judgment. Money is made by waiting. Just open a trade. There was a plan from the beginning. There is an entry, there is a stop loss, there is a take profit level. All together, that is a great risk reward. Um, just a certain percentage, most of the time 2%. That's the biggest loss you can take. And let it go. Don't close it too early out of fear or maybe greed or whatever reason. Money is made by waiting, not by trading. So calm down, scan for a chart, make a plan, execute it, and then once the trade is open, no matter if it starts moving down right away against your move, just leave it. A lot of times things bounce off of support and then skyrocket to where you wanted to go. If you hit close by then, you miss a great opportunity. Just just you know trade like a robot. That's the thing. Just trade like a robot, and don't let emotions sabotage your trading. Well, I hope these top 5 trading psychology fails will help you to identify your own struggles, and I hope at least one of them will improve your trading after watching this video. Thanks for watching, and don't forget to subscribe.